Hi friends, I welcome you all to another lecture on finance related current affairs for upcoming RBI Grade B 2019 and SEBI Grade A 2019 examination. The topic which we are going to decode today in the form of MCQs is Rupee Interest Rate Derivatives Reserve Bank Directions 2019. Now friends, if you are a paid subscriber of our courses, you can simply watch the entire discussion along with the MCQs in the course itself. Now, before proceeding forward, let me quickly tell you about the excellent results that we have achieved over the past few years. Now, in 2017, in RBI Grade B, we had 27 final selections from our students, and in NABARD Grade A, we had 11 final selections from our students. And in 2018, we repeated the same success story. And in RBI Grade B, we had 70 plus final selections, and in NABARD Grade A, we had 26 final selections. Also, in 2018 SEBI Grade A examination, out of the total 84 selections, 41 of our students they made it to the final list, and in the IBPS AFO examination, our students have got 100 plus interview calls. Now, if I talk about the different individual courses that we are providing, then they include RBI Grade B, SEBI Grade A, NABARD Grade A, RBI Assistant, and IBPS AFO examinations. Now, apart from running the separate courses for all those individual examinations, we are also having some combo courses which you can avail. So we have a combo for RBI Grade B, NABARD Grade A, and SEBI Grade A. We are also having a combo for RBI Grade B, NABARD Grade A, SEBI Grade A, RBI Grade B, and NABARD Grade A and SEBI Grade A. So we have all the requisite combos that you can choose from, and you can choose the appropriate course as per your requirements. Let me also tell you about our new course, which is very important for all the banking exams. This is the QRE course. QRE, that is quantitative aptitude, reasoning ability, and English. So all these aspects which are very important for all the banking exams, they are going to be covered in this particular course. Now let's discuss some of the important MCQs framed out of this particular topic. So friends, let's start with the most basic question. Underlying assets for derivatives include. Options are stocks, currencies, interest rates, any of the above. So friends, derivatives, as the name itself suggests, they are those kinds of financial products whose value is dependent on some underlying product or underlying asset. So for example, if I enter into a contract with you to purchase, say, rice worth rupees, say 1 lakh 1 year from now, and we have already fixed the price of that particular contract. Now the price of this particular contract was dependent on the price of the rice. So this rice becomes underlying asset for this particular contract. And in addition to rice, the underlying asset can be any other commodity like wheat, gold, etc. It can even be any other currency. It can even be rate of interest. It can even be stocks which are traded in the market. Most common example of underlying assets, they include stocks, bonds, commodities, currencies, interest rates, and even market indices. So friends, the answer to this question is going to be option number D, that underlying assets for derivatives include any of the above: stocks, currencies, or interest rates. Next question, which of the following is not a type of interest rate derivative? Options are interest rate futures, interest rate swap, interest rate swaptions. All are types of interest rate derivatives. So friends, this question is about the concept of interest rate derivatives. So let's discuss about that. So friends, like derivatives, interest rate derivative, they are a type of derivatives in which case underlying asset is interest rates, or the value of these contracts is dependent on the interest rate. So if interest rate increases or decreases, then this is going to impact the value of interest rate derivatives. So all the entities which are going to have some exposure to interest rates, they are going to love to enter into these kinds of contracts in order to hedge their exposures, in order to safeguard their exposures, like institutional investors, banks, companies, and even individuals. Now there can be different types of interest rate derivatives like interest rate futures, interest rate options, interest rate swaps, or interest rate swaptions. So friends, now we can easily answer this question that all of these, they are types of interest rate derivatives. So our answer is going to be option number 4. So let's start with the next question. RBI on June 26 issued Rupee interest rate derivative directions. Which is are correct regarding eligible participants and transactions in this regard? Options are any person resident in India and any non-resident to the extent specified in these directions is eligible to participate in interest rate derivatives. IRD contracts can be transacted only on recognized stock exchanges, both of the above or none of the above. So friends, if we take a look at the salient features of these new directions, then we are going to find that any person resident in India or even any non-resident, they are eligible to enter into interest rate derivative contracts. All regulated entities, they can also enter into these contracts with the permission of their regulator. And the IRD contracts can be transacted either through recognized stock exchange or even they can be through over the counter participation. Further, special provisions have been made to protect small and retail participants in the RBI directions. So friends, now we can easily answer this question that only first statement is going to be correct because IRD contracts can be transacted on recognized stock exchanges as well as over the counter. So our answer is going to be option number 1. Next question. RBI on June 26 issued Rupee interest rate derivatives Reserve Bank directions. As per directions, retail users can participate in these contracts for the purpose of. Options are hedging, speculation, both of the above or none of the above. So friends, if we take a look at the salient features of these directions, they distinguish between the retail and non-retail users of interest rate derivative contracts. While the retail users, they are allowed to participate in the interest rate derivative contracts, but they can only participate for the purpose of hedging an underlying interest rate risk. However, the resident and non-retail users, they can undertake transactions in permitted products for both hedging and otherwise as well. So for retail users, only purpose is hedging, and for non-retail users, the purpose can be hedging or even otherwise. A non-resident Indian can undertake transactions in rupee interest rate derivative markets to hedge an exposure to rupee interest rate risk and for select other purposes other than hedging. So these are the purposes for which the derivative contracts can be taken by each of these eligible entities. So friends, now we can easily answer that retail users, they can participate in these contracts for the purpose of hedging. So our answer is going to be option number 1. Next question. As per recently issued Rupee interest rate derivatives Reserve Bank directions, market makers in OTC transactions shall report all the transactions including client trades within 30 minutes of the transactions to the. Options are Trade Repository of Clearing Corporation of India Limited, Reserve Bank of India, Securities and Exchange Board of India, or none of the above. So friends, if we take a look at the reporting requirements pertaining to the different types of entities in the context of IRD directions, then in this regard, it has been pointed out that market makers in OTC transactions, like the banks, they can be market maker for over the counter transactions. They have to report all the transactions including client trades within 30 minutes of the transaction to the Trade Repository of Clearing Corporation of India Limited, and they should also indicate the purpose for which the trade is being done, whether it is hedging or any other purpose. Further, the norms have been made for resident users whose exposure exceeds rupees 10 billion at any point of time during the quarter. So they are also required to comply with some reporting requirements. And for cross-border remittances also, banks are required to remit to the RBI proper details on a monthly basis in the prescribed format. So friends, now we can easily answer this question that the answer is going to be Trade Repository of Clearing Corporation of India Limited. That is option number 1. So guys, these are solutions to all the questions. So guys, this was all about our discussion. If you are having any query, you can mail us at hello@edutap.co.in, or you can reach us at 8146-207-241. You can call us or you can WhatsApp us. And I would also recommend that you visit our website www.edutap.co.in for regular updates and important content on the respective examinations. Thank you guys. I wish you happy learning and all the best from the entire team.